The main difference between VUG and VOO is their associated investment risk, with VUG generally considered to be riskier than VOO. This is due in part to volatility, which is a measure of an ETF's price fluctuations at a given time. VUG has a volatility of 5.69%, whereas VOO has a relatively smaller volatility of 3.94%. As a result, VUG is more likely to experience higher price fluctuations, and therefore higher risks. Another key metric that distinguishes these two ETFs is drawdowns, which measure a stock's decline from its peak to its new recovery point. Since its inception, VUG has experienced a maximum drawdown of -50.68%, while VOO has experienced a maximum drawdown of -33.99%. This suggests that VOO has a lower loss probability. In terms of expense ratios, VUG has a 0.04% expense ratio, which is 0.01% higher than VOO's expense ratio. Despite their differences, VUG and VOO do share some similarities, including significant drawdowns in the past and a high correlation value of 0.95. Indicating that their price changes tend to follow similar patterns over time. Ultimately, VOO is considered to be the better choice due to its lower drawdown value, lower loss probability, and lower expense ratios, giving it a slight edge over VUG.